Welcome everyone to Is Everyone Invited? A party guide to non-discrimination testing. Thank you all so much for joining us. The team will be answering the questions you send through the Q&A today. We will try our best to answer all of your questions, but if for whatever reason we're unable to get to your question today, please follow up with your advisor for further assistance. Today's presentation is being recorded. We will be sharing the recording in the follow-up email and on the NFP website. If there are any portions of this call that you missed, by Monday, you'll receive an email with a link to the full recording. The PowerPoint slides used during this presentation will be shared in the same email. At this time, I'll turn it over to Chase Cannon, Senior Vice President and Deputy Chief Compliance Officer of Benefits Compliance at NFP. Chase, the floor is yours.
Amber, thank you so much for that intro and welcome everybody to our webinar today. We're super excited to have you, and we're always super excited as compliance people to talk about non-discrimination. And this is a big topic. We get lots of questions on this. I'd say almost every single day we're talking about non-discrimination or non-discrimination testing in some way. Just we see so many different benefit strategies and designs from clients, from employers around the country, and it's just a key concept that we keep coming back to. So we're going to have some fun today. We're talking about non-discrimination testing through the lens of a party guide. And so we are going to be your party guides today. I know those two thoughts or don't always go together, parties and non-discrimination, or even parties and compliance, but we like to have fun, and so we're going to approach it this way. But really quickly, I'm joined today by Sharon Cohen, who's a member of the benefits compliance team here at NFP and has really extensive background and experience, not only with non-discrimination testing, but just overall with compliance, having worked at the IRS for a little bit, and then with big brokers previously and big clients. And then we have Elizabeth Bonney, who's our sales and marketing manager with American Benefits Group, who is an NFP-owned company that runs non-discrimination testing, among other things, like COBRA administration and flex spending account administration. So American Benefits Group is a company that we love to work with and work closely with. And Elizabeth is just a tremendous resource at American Benefits Group and has a lot of experience running these tests and understands the rules very well as well, and brings that practical side of actually what do the tests look like. And so just a big welcome to Sharon and Elizabeth. You may hear us say ABG, that's American Benefits Group. We sometimes shorten, we love acronyms in the benefits compliance space. And so that's another one you may hear. So with that, we can jump over to our agenda slide and kind of look at what we're talking about when we talk about party planning. And
Which is
Sharon, are you able to advance those slides?
I am trying to advance them. Actually, it's telling me my thing is paused.
I think, and that's
Are
okay.
you not seeing that?
While we're waiting for it to move forward, we do have pictures of me, Sharon, and Elizabeth. And but as you're trying to pull that up, Sharon, and no big deal there, our agenda is really talking about the core concepts and the tests that generally fall into three categories. And at a very high level, I guess another thing to highlight is that when we're talking non-discrimination, we're talking about this idea that you cannot favor your highly compensated employees, right? So there's other non-discrimination rules out there, such as don't treat people differently based on the color of their skin or their religion or their age or their sex or gender, that kind of thing. And then also health status, right? Our HIPAA non-discrimination rules where you can't treat people differently because they are a high claimant or based on a disability, those kind of discrimination. Today, we're just focusing on the tax non-discrimination rules, which are really don't favor your highly compensated employees. Yep. Looks like we're up.
We are. Thank you.
Thanks for that. Do you want to walk us through the agenda here?
Yeah, I would love to do that. And so as Chase was mentioning, we're talking mostly about the tax code today. And I think as everyone knows, in an employment relationship, anything an employer gives to an employee is considered taxable compensation unless there's a specific provision in the Internal Revenue Code that would make it non-taxable. So Congress provided that an employer could give employees certain welfare benefits on a tax-free basis, but they put a caveat into that, and they said that, these tax-free benefits, we mean for them to be provided to rank and file employees. And so many of the laws that came into existence at the time of ERISA, which most of these welfare benefit laws came in around the same time, are structured that way. And ERISA, as you know, was created to protect employees. So these non-discrimination rules are there to ensure that rank and file, the lower paid workers, receive the majority of the benefits. And we today are just going to take a really high level view of non-discrimination testing. We're going to just talk very generally about these tests. And so typically the tests fall into these three categories: an eligibility test, an availability test, and a utilization test. And sometimes there are objective or mathematical tests associated with the various provisions, and sometimes these are subjective tests. And so we're going to discuss also when to do this testing. And Elizabeth is going to walk us through some of the concrete examples and talk a little bit about these subjective and objective tests. Finally, we're going to discuss when you should do the testing, and then we'll talk a little bit about some cautionary tales, some yellow and red flags. And I also wanted to note that we have updated a publication on these non-discrimination tests. And so should our explanation be today pique your interest such that you want more detailed information, we are super happy to provide that to you through your account management team. So it would be great to reach out to them to ask them for the publications on the testing that we're talking about today. And as Chase mentioned, instead of sticking to a dry traditional format of like explaining the tests and the mathematical equations that go with them, we decided to shake things up a little bit. We wanted to have a little fun, especially with Thanksgiving coming up. So Chase and I are here to throw a non-discrimination party, and Elizabeth is here. Not to worry, she's going to keep us compliant and on track. All right, now if I can
Looks like quite the spread. I'm excited for this.
Yeah, me too. So the first question you have to ask yourself when you're throwing a party is it going to be a sit-down table service party, or are you going to have a buffet? And in the context of non-discrimination testing, the question to ask is the employer going to provide a standalone welfare benefit plan that's funded only with employer dollars and no salary reduction, or where employees might pay for benefits with after-tax dollars? I am old enough to have experienced that with the federal government. But today, most employers provide benefits through a cafeteria plan that will include some employer dollars and additional dollars that are provided through salary reduction. And that is what most employers do. And for our party today, we're going to have a cafeteria plan. So Chase, what do you think here about this proposed menu?
Yeah, so first of all, I love the menu design. It looks very fresh, and looks like the type of sit-down menu. Again, that last slide kind of made it look like we were walking through a cafeteria line, but this slide makes it feel like we're at a sit down. But the sit down does have the options, right? And that's what we're looking at with our proposed menu here.
Yeah.
And so, but the decision is what benefits are you going to offer as an employer, particularly for those that are going pre-tax. But our health FSA falls under our small plate menu here. DCAP, that's a dependent care assistance program. Some people refer to that as a dependent care FSA. Same thing. Our adoption assistance programs, HSAs can go through a cafeteria plan. 401k, we don't see that as often, but technically it's a benefit that can be offered under a Section 125 or cafeteria plan. Certain individual policies and paid time off. So of these, I really like the description of the HSAs as glazed carrots with rosemary. I think that's representative of the excellent tax advantages you can get from an HSA. I love carrots, right? Glazed
Yeah.
carrots with rosemary sounds especially awesome. For the main course, we think of this as our insured and our self-insured group health plans. So a little bit more of the major, what's going to fill you up type of benefit, and then group term life and disability and AD&D coverage. So excellent descriptions of those options on the menu there. But that would be sort of the selections that we can choose as employees as we're going through this cafeteria, choosing off the menu type of benefit offering. Anything to add there, Sharon?
I have nothing to add there, but what about this restricted diet?
Yeah. So the restricted diet is again, you mentioned this a little bit up front, but we get the tax advantages, right? But we also get some strings attached to those tax advantages. And so when we're talking about what will be served, what's on the menu here as part of decision number two, we do have to recognize what the restrictions are. What are those strings attached to these delicious items that we're getting tax advantaged on? And so we kind of listed those here under the restricted diet as the benefits subject to non-discrimination testing. There are other rules under Section 125, but we're focusing on the non-discrimination testing. We have cafeteria plan. We have self-insured group health plans. We will sometimes refer to those restrictions as Section 105 non-discrimination testing. Dependent care assistance program, again, that's a DCAP or a dependent care FSA, has its own set of non-discrimination rules, as do adoption assistance programs, group term life, and 401k. Really think of those as the restricted diets on the menu. You gotta look out for those before you dive in, right? What do we have to think about before we take those bites? Personally, I love the dessert menu. It has nothing to do with what we're talking about, um, other than it's on the menu, but no benefits here except for a mini chocolate mousse cup. Sounds delightful right now.
Yes, it does. Maybe we didn't have enough lunch today. So The next, the next question to ask when you're planning a party, of course, is to identify your invitees. So, who is going to be on our guest list? On our guest list, only common law employees are going to be on that guest list. So, these are those individuals who receive a Form W-2 from their employer. And ideally, we would like to have more of these rank and file, lower paid employees than we do highly compensated. Who is not going to be on the guest list? Independent contractors are not going to be on the guest list. Non-employee board members, not on our guest list. And sometimes we get asked how it can be that you would have a board member who is also an employee. So one example of that would be, for example, a CFO who is an employee, but then also sits on the board of a particular company to help with maybe strategic direction or something like that. And their role on the board is separate from their employee duties, but they do overlap in some ways. A more than 2% shareholder of an S Corp is not considered an employee. A partner in a partnership, self-employed individuals would not be I'm sorry, Form W-2 employees. Now, this slide, these are the guests that we have to keep an eye on. And that would be, generally speaking, highly compensated employees. So here we lay out, but we are not going to go bullet by bullet to discuss each of these, but we are laying out here those individuals. For some of the tests, they might be considered highly compensated individuals. Different terms are used for different tests. And other tests, they're considered highly compensated participants. But for purposes of simplicity and for our discussion today, we're going to lump all of them into one group and call them highly compensated employees or HCEs. This is a brief overview of our restricted guests for purposes of providing tax-free benefits to employees. Generally, I'm going to be really general to sort of bunch everything together. For the different benefits, they define their highly compensated in different ways. It's the tax code. Nothing's going to be easy about it. But generally, we are talking about an officer of the employer or a more than 5% owner or shareholder or an individual that earns pay above a specific threshold level. And you can see some of those here. In some cases, we look at the salary of last year's salary to determine if they're an HCE for the year. And for some individuals, this highly compensated status is going to get attributed to relatives who also might work for the employer, like a dependent or a spouse. And I want to make sure here we mention HRAs, and we mentioned them on the previous slide as well. An HRA is a self-insured medical plan. Today, we're only talking about cafeteria plan benefits, but an HRA cannot be provided under a cafeteria plan. But I do want to clarify, we mentioned them a little bit on these slides because they are considered self-insured medical plans. They are also subject to non-discrimination testing. Anything to add here, Chase?
Just really quickly, each of these is its own set of non-discrimination rules and testing, right? And so when it would be much easier if we just had one set of that applied to all these benefits, but each
Yeah.
of these rules, again, going back to, we get the tax advantages, but the tax code is written in a way where you get the tax advantages based on a certain section of the tax code. Each of these has its own section of the tax code and therefore has its own rules that go with it. So makes it a little bit more complicated, but the concept there is this restricted guest, right? These are the HCs, those highly compensated employees or key employees that you really got to watch and make sure you don't have too many of these getting through past the bouncer.
Yep. Okay. So what about our invitees? How are you going to manage those invites?
Yeah, and that's really kind of the decision number 4 here. How do you manage the actual invites? What we're really talking about here is the eligibility tests, right? Like what are we looking at? What are the how do we do that? And the general concept is the plan cannot discriminate in favor of highly compensated and key employees in terms of eligibility to participate. And so we generally say if you want to be okay under these eligibility tests, we're going to be okay if we offer a plan on the same terms to all employees. We're generally going to get past this test. And so we have similar concepts, again, talking about each component benefit there that we were looking at on the last slide with the definition of HCE. We're looking at here as well. There's specific eligibility rules, and in some cases, very specific percentages that need to be met. But that concept is we're going to be okay if we invite all of our employees. If we're just saying we're gonna make sure everybody gets the invitation. So that's kind of the concept that will keep you okay going through this eligibility test.
Yeah. What about
Um,
this idea, though, of benefiting under the plan, right?
Yeah, that's a challenge too. And some of the way that the rules are written, there's some confusion about what that means when we're saying, are all employees benefiting under the plan? Is there a certain number or percentage that we have to meet that benefit under the plan? The rules themselves kind of draw this distinction between being eligible and benefiting. We
Mhm.
think benefiting means that you are actually enrolled in the plan, right? You are in the plan
You're taking
benefiting.
some benefit, right?
Yeah, yeah, you're in the party, you're ordering and eating something off of the menu.
Yep.
So we get down to this concept of if we want to invite most, but not all of our employees. And I started off the call talking about, we talk a lot about non-discrimination. This is where we talk about it, right? Which employees are being excluded, part-timers, seasonal, hourly. We have to go through a little bit of an analysis there, looking at passing these tests. of seeing whether we have this reasonable or discriminatory classification of employees. Sometimes we refer to that as a bona fide business classification. But the idea is if you're going to create some type of invitation list that's not inclusive of all employees, you have to have a business-based purpose for the classifications that you're creating. And so some of those are listed here: salaried versus hourly, full-time versus part-time, different geographic locations, different job classifications. Those would all be business-based, right? There's some other reason besides benefits on why you could draw the line. Does that make sense, Sharon?
It does. It does.
Yeah. And so on this slide, we kind of really talk about that concept of who's really benefiting. We have to make sure at our party that we have a good mix of guests. Employees are benefit, and that really specifically means we need to have a minimum percentage of non-highly compensated employees joining the party, coming to the party, partaking of the benefits, ordering off the menu, however you want to look at that. They're making the election, they're getting into the plan. You really look at that percentage of non-highly compensated. And so some of those classifications where we say we just want our executives to come into this party, and then we're looking at the mix of guests, you're going to have too many highly compensated. You're going to have trouble under the eligibility test, and that's not a good thing, right? So under this title of "Are we good?" we tried to reword in a little bit of layman's terms, or at least kind of an example of how you get past these tests. For a cafeteria plan, think of it, if 50% or more of our non-highly compensated employees are benefiting, then likely we're going to be okay. If it's said another way, if less than 100% of HCEs benefit and non-HCEs make up more than 60% of the workforce, then we're going to be okay too. So those are kind of two ways to look at it, eyeballing this.
Yeah, because we get asked all the time, right? What's a ballpark figure?
Right.
Right? What does that mean? And it's very hard because it's hard to provide context for you want a good mix of employees when you don't really know what the population is, what the numbers are, and it's
Yeah.
impossible really to provide. This is the best we can do to provide a ballpark figure about passing the eligibility test for a cafeteria plan, right?
Right. Yeah, exactly. Just trying to put some concept that you can eyeball because the testing will get into much more of that detailed information.
Yep.
This keeping it fair idea really is just high level thinking about, is it really an option for somebody who's very low paid to be able to get into a plan, right? So just this idea, if we have a formal dress code and we provide free tax rentals to HCEs, is the party truly inclusive? So in other words, if you're making plans available, but it's not really practical that most of your workforce could actually make the election and get in and participate,
Yep.
that's just a higher level thinking of whether you're going to pass these eligibility tests and benefits tests.
Yep. So, oops, sorry. So let's talk a little bit about the benefits test.
Right.
One of the ways to sort of think about this is who gets access to the buffet table. And we have availability tests and we have a utilization test. So here we're talking about an availability test. And one of the ways to think about that, an analogy would be, what if our HCEs take most of the food and are the only ones allowed access to the Michelin chef's dishes at the table? So the availability test is designed to ensure that contributions and benefits are offered fairly, preventing HCEs from being offered more or better benefits that would be available to the non-HCEs. And if we look at the concept with respect to a self-funded plan, these are some of the important points about this test. So number one, required employee contributions have to be identical at each level. Most of the plans that we see today would really meet this goal, right? The maximum benefit level can't vary by age, years of service, or years of compensation. When you think about years of service or pay, it's inherently discriminatory because the longer someone has worked for an employer, the higher the pay they have to be. But in the reverse of that, we believe that reverse discrimination, in other words, providing a better benefit or a lower copay, for example, to lower paid workers, would be okay. And this would mean that setting price, for example, on salary bands where the lower paid actually pay less for the benefit would be permissible. The same type of benefit that's available to an HCE must be available to non-HCEs. Most of the plans we see today do that, but there occasionally we can get like a tricky one that throws in a self-funded plan just for executives paid for through the cafeteria plan. Um, uh, and that would be a problem here. And then finally, you can't impose different or disparate waiting periods for people. This utilization test is thinking about, do we need to worry if the HCEs consume most of the food at the buffet table? So let's look at different it's a different type of benefits test. It's this utilization test. And if you think about the availability test that was on the previous slide, you could think about that one as who is offered the buffet. And then for the utilization, you're thinking about who's actually taking the food. So both of these tests fulfill similar, they look very similar, they feel very similar, but there's nuanced objectives to a utilization test versus an availability test. They both focus on ensuring that contributions and benefits are available on a non-discriminatory basis, but the utilization test specifically looks at who is using or benefiting the most under the plan. And it looks at the ratio between HCEs and non-HCEs, and would that be palatable under the law? Do you see what I just did there with palatable? So the test that we are talking about for utilization, there's a cafeteria plan test that's called the key employee test, and the DCAP also has a key employee test, and then there's the infamous 55% average benefit test for dependent care. And I don't know, something here you might think about is providing credits or a lower price tag for the C-suite, which we sometimes do see. If the benefit is priced such that only HCEs can participate, then that would be problematic. In the DCAP, we usually have a situation where those tend to fail. Now, it could just be that you have an employee population where only your HCEs have children and actually choose that benefit. Or you can have another situation where you have an employee that can't tolerate the lag time between having to pay for the daycare and then being reimbursed, which would be at the end of the month after the care is provided. Or you have employees that don't participate because they don't really understand the benefit. They think it's subject to the use it or lose it. They're worried they can't change their election if their daycare situation changes. And basically just you don't get the participation that you need. So what happens, Chase, if it gets too wild, the party gets too wild?
Yeah, well, I mean, crowd surfing is a thing in non-discrimination testing, right?
Yep.
Yeah. So generally speaking, the way we describe this is really that the party foul goes against the highly compensated employees, right? The plan itself can continue. It's not like the plan is disqualified for non-discrimination testing failure. The non-HCEs and non-keys are not affected by a plan's failure to pass the non-discrimination test. But it is a very difficult conversation, and also with your most important people, generally speaking, right? Not
Yep.
always the most important people, but your HCEs are generally the ones that you don't want to have hard conversations with. And so, but the tax consequences really fall back on the HCEs at a very high level. They are the ones that will have some type of taxable event happen. They're going to be taxed on some type of benefit. So the non-HCEs, they're not taxed on the amount of their salary reductions. There's no cash amounts that become taxable under and for non-HCEs, it's just kind of like they continue at the party, it's fine. But the HCEs are really the ones that that suffer the consequences, that get kicked out of the party by the bouncers, if you want to continue that
Yeah.
analogy. So
So it's not like your plan is, you don't have a good plan.
Correct.
Right, everyone still
Right.
gets benefits, but some people are going to be taxed on them. And the employer then would also have to include those amounts for employment tax purposes.
That's right. So on the next slide, we kind of go into a little bit more of what that looks like when it's under each of these tests. But the general idea is loss of exclusion, loss of the tax benefit for the HCE. The bottom there, we say for the employer, those amounts are become subject to wage reporting, which means there's that employer employment tax withholding that needs to be applied. Um, Really quickly, there was an provision of the ACA that would make a non-discrimination failure. Well, that first of all would take basically the Section 105 rules for self-insured plans and apply them to fully insured plans. And the penalty under that ACA provision was a hefty employer, uh, basically a payment or penalty monetary amount that would have to be paid by the employer. That provision of the ACA is not in effect right now. Basically, they just punted on it for a while, so we don't have to worry about that for fully insureds. But you may, for fully insured plans, but you may hear that or read it somewhere, and that's a provision of the ACA that's not currently in effect. But otherwise, it just becomes, a taxable event to the HCEs, and like that picture there. That is definitely not me in the picture. I know my face was part of the crowd surfing. I don't have any hair, so this one definitely cannot be me.
Yeah. All right. So timing is everything, right? And so the law requires that benefit plans basically be non-discriminatory by year end, right? So that's what the law says, that you have a non-discriminatory plan. We kind of interpret that as being able to provide a report at the end of the year that your plan met the non-discrimination requirements. And this is what the Department of Labor, the IRS would ask for if they ever come knocking. They're going to ask you to show them that your plans are not discriminatory, in addition to probably asking you for plan documents. And here we refer to, for purposes of our party, as New Year's brunch as for testing timing, New Year's brunch, a mid-year luncheon, or a year-end gala. So in a perfect world, an employer might test their plan 3 times a year to gauge how it's going. This would especially be important for employers who have experienced a significant demographic change or who have never tested before. On the other hand, if you have an employer that is testing consistently each year and has a stable benefit plan structure and an employee population, then year-end testing might be sufficient to just test at the end of the year. One idea that we really encourage is testing between open enrollment and the start of the new plan year. That requires an employer to sort of think ahead and give themselves a little cushion, a little pad of time to be able to get your open enrollment and then run a test before the new plan year starts. And we would actually consider this the best practice because it avoids adjusting HCE elections before the plan year has started. And the election change rules actually don't say anything about non-discrimination testing. And in that way, they don't formally recognize an election change due to a non-discrimination testing failure or discrepancy. But the IRS has sort of informally nodded that that would be okay. They've talked publicly about how that might be okay, but you could actually avoid all of that by testing between, getting an idea of how the plan's going to run between open enrollment and the start of the plan year, if you can do the testing then. Elizabeth, do you have any thoughts about this?
Well, you're absolutely right. Typically, we do see employers testing all of these different times of year, sometimes all three times of the year. But testing, especially again, if you have never tested before, testing the earlier, the better. And for those who, for instance, have failed that infamous dependent care 55 average test, right after open enrollment is a perfect time to test that. And then again at the end of the year. So absolutely. And Here I'm just showing that American Benefits Group, we do offer the non-discrimination testing. We offer it to our administration clients as well as clients that we don't administer benefits for. And for our administration clients, we do offer a self-service model. There's many groups that are very experienced in doing their testing at this point, so they're able to log into a portal and upload their testing and get results immediately. And then, of course, we have our assisted model where ABG can do some hand holding. We can have consultation calls before the testing, during the testing, and even after the testing. And we do offer these bundles when we do the testing. We have the POP plan testing only. We have the full Section 125 test with the FSAs. We also offer a test that includes the HRA, even though it's not part of the 125 test. It is just for convenience. And then we do the HRA test separately and self-insured medical plans. And again, the dependent care, we do offer that as a separate test where that could be tested preemptively, again, right at the beginning of the plan year or right after open enrollment. Next slide.
Oh God, it doesn't want to go. Hold on. Sorry.
So for the purposes of today, we're kind of looking at that cafeteria plan, and the bundle that we run includes, as you can see, all the testing that Chase and Sharon were sharing earlier, the eligibility, the classification, the contributions, the utilization. So it tests that for the cafeteria plan overall. It tests for the health FSA. And then it also does a test for the dependent care. So it's one bundle that runs these 13 tests. And what we're going to look at today is a couple examples of tests, cafeteria plan tests, and the results that were received. So we can start on the next slide for that.
Here we go.
So most of vendors who are going to be running tests are going to ask for, certain information. Some people refer to it as a census, but it is a data collection that is needed to perform these tests. And the type of information, and it sometimes seems daunting when you are asked for this information, but all this information is needed in the testing to determine if somebody's highly compensated, if somebody's a key employee, if they're actually utilizing the benefit. So we're looking at, date of hire, date of birth, gross wages for both the prior year and the projected current year. Some of the tests do use a look back year to determine if somebody's highly compensated, if they're eligible for the benefits, any designation they might have, such as an officer, an owner, if they're collectively bargained, their employment status, what type of worker are they? Are they a full-time worker, part-time? Are they a seasonal worker? And of course, we're going to want any of the pre-tax premiums for each employee, each person for any of the plans that fall under the cafeteria plan, your medical, your vision, your dental, HSA, FSA, LPF, DCA. So this is the type of, this would be your objective data that we would be collecting. And this, again, will determine who's highly comped and who's not. And it will be comparing the utilization of those two populations. In addition to the objective information, we also are going to be asking some subjective questions. This is the kind of information that you can't gather just from data. It would be eligibility, wanting to make sure that everybody's eligible, they have the same waiting period, they're eligible for the same benefits. And then are they all able to order off the same menu? Everybody has the same menu at the same cost, knowing that of course people are going to make different choices, but to make sure that yes, they can order the same items off the menu for the same cost. So those would be the subjective questions. So we're going to take a look at this is a real example of what a test result might look like. This is a dependent care 55 average test. Again, the most common test to fail. And this test basically is saying that your non-highly comps must benefit at least 55% or more than your highly compensated employees. And the way that they calculate that is to take who are the total number of non-highly compensated employees and how much collectively are they contributing to dependent care. And then it will compare that to the total number of highly compensated employees and how much they're collectively contributing. And with the math calculations, the percentage for the utilization must be 55% for non-highly compensated employees. And in this example, as you can see, it's not. It's 30.41%. And therefore, this test would fail. And so what would happen also is that with that failure, there would be a recommendation. How do you fix this failure? So a recommendation would be provided as well, and we could see on the next page what that recommendation would be. Now, although it looks at every highly compensated employee and every non-highly compensated employee, of course, it's only those who are participating that would need to make an adjustment, those highly compensated employees who are participating. And it's going to recommend an even percentage of an adjustment for each of those employees. So in order for this test to pass, you can see down in the total in the yellow, the original DCAP contributions, how much they would contribute collectively. And again, this would be a goal since we would be wanting to test this very early. So they would not have contributed this yet. So they're going to say, hey, you know, you'd have to go to the highly compensated, because we failed this non-discrimination testing, we're going to have to reduce your pre-tax contributions to the recommendation amount. So for Jane Doe, her original goal of 5,000 would be revised to $2,764.60. And once those adjustments are made, then the test would pass. The next example we're going to look at is the actual utilization test for the overall cafeteria plan. And again, with all of these tests, they want to make sure that non-highly compensated employees are, benefiting as much, if not more, than highly compensated. And in this particular test, they're taking all the contributions of the under the cafeteria plan of the highly compensated employees and looking at their collective compensation as well. And then they're comparing it to all the pre-tax contributions for non-highly compensated and, of course, their overall compensation. And the non-highly compensated employees must have a higher percentage than the high compensated. And as you can see here, they don't. It's less, and therefore the test fails. And for this particular test, there is a safe harbor that that this, could be tested. And if you were to have a failure, you could work with your attorney to see if it would pass under a safe harbor test. The next slide is going to show again a recommendation to reduce the overall contributions in the cafeteria plan. And for this particular test, in many cases, those contributions are your medical, dental, vision. They aren't a dependent care where they're going to stop contributing to their dependent care once they hit that cap. These employees are going to need to pay for those benefits annually They just are going to need to take the difference between that annual amount that their premiums are going to cost in the revised amount, and the difference would be paid for post-tax rather than pre-tax. And that's the way this failure would be corrected.
And you know what, Elizabeth, I forgot to mention during when you were discussing the dependent care, if one employee's election has to be reduced under their employer's plan because the plan has been considered discriminatory. With respect to dependent care, you are permitted $5,000 a year. So if one spouse has to reduce their election to below a $5,000 exclusion, the other working spouse could actually make could make now I'm
The
saying
difference,
this
up the
that they're
difference.
thinking, yes, could make an election with their employer to cover those expenses and make up the difference for the $5,000. I forgot to mention that here. With the cafeteria plan, that is not going to be a situation that would allow something like that.
And also with the dependent care, if an employer is consistently failing, they can reduce the amount that those highly comps can elect. And in some cases, they can even not offer it to highly comps. So
Right.
there
So
are,
they would go in at open enrollment and say, this is your maximum benefit under your DCAP. Is that what would happen?
yep,
Okay.
and they do.
Okay. Thank you.
So that's kind of my examples for today. So we probably can go to the
Case, want to talk
slides.
to us about anticipating problems?
Yeah, no, thanks, Elizabeth, for walking through the practicalities there, what those tests actually look like, right? We're getting into the weeds of the testing, but it's also really helpful to kind of understand what it looks like to go through that testing process, and also to know that there are adjustments that can be made, right?
Mm-hmm.
So that even though some of the adjustments might be difficult conversations with HCEs, at least they're happening and usually happening ahead of time. So, but yeah, let's talk about some yellow flag guests. And these are plan designs that might really raise a question about whether they would pass the non-discrimination test. Separate plans for different employee groups. We talked about this one a little bit, but one plan that covers hourly employees, a different plan that covers salaried employees. Again, we talked about having that bona fide business classification or that sort of business reason for making that distinction that goes beyond benefits. You would have that here with a hourly versus salary type of plan design. But then you would need to go through the analysis and the testing to see whether the result of that variance in plans is favoring highly compensated employees. So that just if that idea, if you're getting different plans for different employee groups is a yellow flag. Exclusion of part-time, seasonal, or temporary/intern employees is something we see often that would need to be looked at.
And
Employees in,
it's not necessarily, Chase, I'm sorry, to say
no,
that these are immediate game changers, right?
right.
Right? That it may be possible to structure a plan, but it's something you want to take a look at before you do it that way.
Exactly. Yeah, thanks for that clarification. Um, Employees in one division or company in a control group are covered, but employees in another division or company are excluded. I know this question came in through the chat, this idea of a control group or one company, a parent company and a subsidiary or a brother or sister type of companies. Same concepts, right? You could probably offer or divide up eligibility or plan offerings within the control group. But when you run the test, you're looking at everybody within the control group. In other words, all employers that are related are included in the testing when you're determining who is a highly compensated employee, when you're determining whether those highly compensated employees are being favored. So you can't just carve out one company, run the tests, and say that's non-discriminatory. You have to consider the broader group. The controlled group is how we generally refer to that.
Right. So Elizabeth's with ABG and we're with NFP. And we are a control group and we are all eligible for the same benefit plan.
That's correct. Yeah, so perfect example of that concept. Cafeteria plans of small corporations where shareholder employees might be participating. That's can be challenging. The key employee concentration test can be a problem in that scenario. And then keep in mind that insurance carriers generally don't balk at non-discriminatory designs, right? So they're in other words, the carriers aren't on the hook for this. So they don't really have an interest in determining whether the plan design that you're suggesting to the carrier is going to satisfy these rules.
Yeah.
So
They
that's
might not be your best consultant on this.
correct. What about red flag designs, Sharon?
Well, these would be guests that you just decided you're just never going to have them there because either they start arguments or they've like overindulged. And so
Yeah,
they're
they
just
passed out one too many times in your living room.
yes, stop sign events. So disparate like employment requirements or waiting periods or entry dates that would vary for different groups of employees, that is going to be problematic. And I think you kind of talked about that where you might have a single group plan, I'm sorry, cafeteria plan, and then there's different entry requirements for different types of employees in the controlled group. A delayed entry. So, I mean, this is an automatic fail. Entry into the plan that's delayed beyond the first day of the plan year, beginning after the date the employment requirement is met. That's just an automatic failure. Thirdly, a plan that bases employer contributions or benefits, again, we talked about this earlier, on years of service or percentage of compensation. These things are inherently discriminatory. You can do the reverse. And so if you were to provide something better or based on fewer years of service, give them cheaper health coverage, for example, that would be okay. Where an employer has partners or is a sole proprietor or they extend benefits to their independent contractors. That is kind of a big one that we see. You have an independent contractor who may be working for you for years and years, and they're actually considered a sole proprietor because they're truly an independent contractor and not an employee. You cannot let them purchase health coverage from you. They can't participate on a pretext basis in the cafeteria plan. Anything else you see here, Chase, that is worth commenting?
I mean, just that general concept that you can generally favor your non-highly compensated, right? And we do see that sometimes with salary bands, types of contribution structures where lower paid employees are actually being asked to pay much less. And
Yes,
that's
I
what we're
would.
talking about when we say reverse discrimination, right?
Sure. Yeah, I was recently talking with an employer who is trying to look at their whole benefit structure and in terms of attracting and retaining employees.
Mm-hmm.
And they had a lot of turnover with their lower paid people, and they don't get a lot of participation. And this was one of the strategies that they were looking at to provide either a free benefit or a lower cost to those rank and file employees as a way to attract and retain.
Yeah, just great point. Another one that's coming in through chat is how do sometimes who owns company stock? Company ownership is not always widely known, right? The way that this question was posed is company ownership is kept very secret. Is
Hmm.
that something? How do would who in the company would know that? Because obviously that's something a need to know for an HR benefit person to be able to run these tests, right?
Yes.
Who would know that information, obviously, besides the CEO or the head of the company? Uh, I would think finance, somebody like that. But I guess the point is that that information should be something that the HR team should be able to
Yeah.
ask somebody within the company because there's a very real reason to know it.
Right.
But that is a good question. Like oftentimes it's not immediately obvious who
Parent.
are the owners, and then you're talking about a more than 2% shareholder, right? Or a more than 5% uh, owner in the company. So
Yes.
getting
And there
that
are
information
often situations where these individuals aren't paying for coverage at all, right?
right.
Yeah. Anything else in the Q&A? I'm not able to see it at the moment.
We already talked about control groups and bona fide business classifications. Those were a couple of questions that came in. But I think we should get to the party favors because that's why
Yeah.
everybody showed up to this party, right?
That's right. So in summing things up, think about these takeaways and lessons learned as your gift bag from today's presentation. It's been lovingly filled with best practices and thoughtful points. Um, and it's ready for you to take it back and implement it. And Elizabeth really helped us with coming up with these takeaways. And one of the first ones, I think, I would say kiddingly, test early and often. Well, I don't think you have to test often, but I do think testing early, conducting that test, where there's time to make adjustments, either before the beginning of the plan year or early in the plan year, it just helps everyone understand that maybe I'm going to not get the election that I made because the plan is teetering towards highly compensated employees. Any other thoughts around testing early? No?
Great idea. Yeah.
Okay. The
Absolutely.
other one, the other one is to offer benefits equitably. I mean, this is sort of a huge takeaway from the whole thing. I know no employer is really thinking about how to inequitably offer benefits, but we do
Right.
think about our highly comps and how we want to, sometimes it's the nature of the business. We have to provide them with certain things that we can't provide the rest of our employee population for. But sometimes those benefits don't get to be provided on a tax-free basis.
Right.
If you start imposing limitations for certain groups, that can be problematic. Consider your employee population, making plans affordable for them, and things like that. And then the third takeaway is evaluate eligibility. And I'm going to make this point my own, but Elizabeth really brought it up. She was saying that expanding benefits to excluded groups, a lot of times employers are thinking about not providing benefits, for example, to part-time individuals because of the cost. So there's a cost to, of course, allowing them to be included in the plan, but there's also a cost with having a discriminatory plan. So if you expanded benefits to provide some of those individuals eligibility into your group plan, it might actually be helpful to that, for the non-discrimination testing purposes. Was there anything else, Elizabeth, that I missed in describing that point?
I don't think so. But again, as you had mentioned, sometimes the employer is thinking, part-time people, they're not going to cost as much, but it does often cause the test to fail.
Right. And then you might have, 20 part-time workers doing the job of 10 full-time workers.
Mhm.
So there's that to think about too. Chase, anything else to offer here?
No, you covered it very well. I think these are wonderful takeaway treats. I
Mhm.
wish we could send each of our listeners today the bag that is pictured on this slide because you all deserve it for sitting through an hour with us on non-discrimination. But we
Oop,
really hope that enjoyed our party today. Another great takeaway is our publications, a set of publications that we have on this topic. And so for any additional questions, we'll obviously be sending around the recording and slides, which you're free to party with anytime. but we also have available our publications. So ask your NFP account manager for those, and we can get those to you. Those just go into a lot more detail with the specifics on each of the tests that we talked about, and can be a great resource as you're walking through this. Of course, NFP is happy to answer any other questions. We answered several through the chat, so thank you for those. Sharon, Elizabeth, it was wonderful to have you on the webinar today and appreciate your insights. And I can't wait to plan our next party, whatever that might be, together. But for everybody, thank you for joining us today. I'm going to flip it back over to Amber to take us out of the webinar.
All right. Well, thank you, Chase, Sharon, and Elizabeth, for sharing your valuable time and expertise with us today. To reiterate, today's presentation was recorded. We will be sharing the recording in the follow-up email and on the NFP website. If there are any portions of this call that you missed, by Monday, you'll receive an email with a link to the full recording. The PowerPoint slides used during this presentation will be shared in the same email. At the end of this call, a survey will populate in a new window. Please take a brief moment to complete the survey, as it lets us know what topics are important to our listeners and helps make our education program as current and relevant as possible. That concludes our webinar for today. Thank you, everyone, for joining us, and have a great day.